So COVID ended, you own a business, and you killed it, right? Revenue is high, thank God, of course, but you have all these cool things called expenses. So it's tax season, you sit with your accountant, you have rent, you have expenses with employees, right? You have credit cards, maybe you write off your car through your business. So legally, of course, your net profit, you show a certain amount. Now, perfect time to buy a house, you think. You reach out to a mortgage professional like this guy, and we start a pre-approval consult, but your net profit, it's actually not even high enough to finance a bike. So unfortunately, there's a lot of frowns, but let's turn that frown upside down. We have great news for you, the non-QM mortgage. Before we get into it, I'm Andrew Russell, owner and founder of RCG Mortgage, a previous Mortgage Broker of the Year winner through NAMBY, top originator through Scotsman Guide. But make sure, guys, you like, comment, and subscribe. If you don't subscribe, it's going to affect our ability to do more of these, and I know you guys love them. So a non-QM mortgage, what is it? Let's get into it. So what the heck is a non-QM? What does non-QM even mean? Let's talk about it. Let's unpack it. QM stands for qualified mortgage. So there were some regulations, right, that the government put out. You have to qualify people for mortgages in a certain fashion by checking their income. Specifically, for self-employed clients, we have to look at tax returns, business tax returns, K-1s. What the heck are all these things? It's a lot of stuff, but typically we found that the self-employed client, they take advantage of the legal IRS allowability to write off certain stuff that W-2 employees cannot. But because of that, if they make, say, $500,000 a year in revenue, and they write off from an expense perspective $450,000, that nets about $50,000, but that $50,000 net, which is what mortgage companies go off of, is not enough to qualify to buy a house typically, especially in the downstate New York area. So what do? We turn frowns upside down. Here comes non-QM mortgages. How they figure out qualifications. Just remember, 3 things: credit, income, and assets. Now the income piece is what we're talking about here. So on a non-QM mortgage, there's a couple different options of how we determine income, right? What are they? It's a great question. The first one, which got super popular, is actually we ask for the business bank statements. That's right, business bank statements, not the tax returns. We don't even want to see the tax returns. We get the business bank statements, and we look at the monthly revenue coming in, right? The cash flow. So we take that monthly revenue coming in, and that is the baseline for what we lend off of instead of the tax returns. Super cool. The new, more trendy, more bougie kind of thing coming out right now is actually a profit and loss. We don't even want to see the bank statements anymore. We go off of a borrower-prepared profit and loss statement. Now, what's a profit and loss? A P&L? Great question. It's basically revenue, expenses, profit. Again, revenue, expenses, profit, and we go off of the profit. So the borrower will tell us, hey, this is what we have from a revenue perspective. These are our expenses, and the net profit is X, right? And we go off of that net number, and that's what we use, versus taking their tax returns and going off numbers that are a little bit more conservative. Besides those, from a non-QM perspective, there's no income check programs, which exist depending on the state you're purchasing in. There's investment purchases that allow, number 1, we lend off of the market rent as an income determiner, number 1, and number 2, it allows for an LLC or corporation to be entitled. Super cool, people want that all the time. So as you can see, non-QM with some of these options we just went over has completely taken the self-employed market by storm. So as you can see, in years past, there was a high percent of self-employed borrowers that just straight up didn't qualify. Fast forward to current times, amazing. We have this new, cool, bougie, non-QM mortgage product where a way higher percent of clients that are self-employed now qualify to buy houses. If you're self-employed and you love what you heard about this non-QM mortgage, it's amazing. Make sure you comment below. Make sure you like, comment, make sure you guys subscribe to our page. We really want to get these educational videos out there. Thanks so much for tuning in, and until next time, we'll see you then.